I'm Gene Goldman, and here's a look at the week ahead for the week of March 6th. Last week, U.S. stocks broke their recent downtrend and popped a bit higher. Optimism around upcoming economic data being released in the next couple of weeks, especially around jobs and inflation. When you take these together, investors are hoping a slowdown in both of them, which creates a potential soft landing scenario, which is the perfect economic scenario. With this said, the S&P 500, which is a broad stock market benchmark, was up about 1.9% last week. So looking at this week, Fed Chairman Powell speaks to Congress in his semi-annual testimony. And given the uncertainty around interest rates, we hope he gets some insight in terms of where interest rates are headed. Also, we're going to get a ton of economic data, especially on the labor market. We get ADP, we get JOLTS, we get jobless claims, and the one we're watching the most is Friday's February payroll report. So why is this report so important? Well, remember, it's one of the first looks at last month's economy. And as we mentioned in our video last week, the January data did pick up and suggested that there's a pickup in the economy. Now we're trying to understand, is this a 1 month thing or is it an upward trend? Remember, the market does not want an upward trend because this means the Fed will need to be much more aggressive. Also, that January payroll report came out huge. It was 517,000. If you go back a month ago, remember, this report came days after the Fed meeting where the Fed basically suggested that rates are going to start to slow down a bit. So this kind of questions the Fed's overall dovishness. The markets want this report to come back to earth. So what does the market expect? Well, the consensus is that job growth is up 215,000, lower than the 517,000 last month, and that the unemployment rate stays flat at 3.4%. On our end, we expect a little bit of a slower reading in terms of jobs. January, remember, was very much of a warm weather month, and we saw some seasonal factors. Both of these helped to boost January's payroll report. We think in February, this will come down a little bit. Also, employment surveys are starting to slow a bit. And then, unfortunately, we're seeing more layoffs. We're seeing some job vacancies slowing down. All of this together suggests a little bit slower reading in terms of what's expected for the payroll report on Friday. Overall takeaway, the labor market is the strength of this economy, but there's good and bad news. The good news is that the strong labor market keeps any potential recession mild. The bad news is that a strong labor market could lead to more inflation pressure, which pressures the Fed to raise rates more. Thanks for listening. For more information, please follow us on Twitter at Cetera IM, and we'll see you next week, and thank you.